All right, what's up, everybody? Welcome to Sunday Option Q&A. I'm your host, James Legends. We also have Swing Bull here. He's also one of our option shot callers, so we're going to get it started. So this is just a little session that I do every Sunday from 8 to 9 Eastern Time, where you guys could ask me any kind of questions about options or anything else that I could answer. You could ask by commenting in free live stream chat today, or if you want, you can open your mic and speak as well. Just make sure that if you're not speaking, to have your mic muted so that we don't have any hot mic situations. And yeah, without further ado, let's get it started, right? So obviously the one stock that's on everybody's mind this week is going to be Amazon, right? Because they are doing their forward split tomorrow. So basically, this split is going to be a 1-for-20 split, meaning if you own one share of Amazon, you get 20 shares, and the price now will be divided by 20, right? So this is actually going to open up somewhere in the $120 range tomorrow when it splits. So what's going to end up happening now with the Amazon options is, since it's not going to be a $2,000 stock anymore, these options, which actually have already been rewritten. Sorry for my stuttering there. As you could see, they're actually already rewritten here, right? So we have now all these strikes on Amazon that we haven't seen in a million years. We have, $150 strikes, $120 strikes. So it's going to be interesting to see. One of the main things about this, and one of the good things for people with smaller accounts, is that these options, once you could see the prices of them, they're actually going to be a lot cheaper now too, because this is no longer a $2,000 stock. So as you know, like 1% or 2%, let's say, on Amazon is about $60, right? So when a stock can move 2% in a day, which Amazon definitely can, and 2% is $60, the options were going to be priced much higher, right? Because a $60 move is pretty good for an option if you're holding the right option. You can make a lot of money on a $60 move, because options go off of the amount of dollars that the stock moves, not by the percentage that the stock moves. But now it's going to be around that $120 range. So now the options are actually going to be much cheaper, because now 2% on this really becomes like, $2 or $3 or maybe $4. So not as many dollars of a move. So the options are now going to get much cheaper. So that'll be cool. We're definitely going to watch this one tomorrow. There's really no reason for me to even go over this chart right now, because in reality, it's going to open up looking completely different tomorrow. And, we'll be able to make some day trades and stuff off of that. I know that when Apple did their forward split, that they ended up dropping a decent amount before they finally started coming back up after the split, right? They actually ran into the split, kind of like what Amazon did here. It ran into its split. And now tomorrow, if it follows what Apple did, it could end up dropping off a little bit after the split. Investors taking profit on the shares that they bought down here, whatever it may be. And then, maybe we see a rise from there. Or it could just end up going up too. Like, anything can really happen with something like this. I know that Amazon at $120 per share is going to look pretty attractive to a lot of like retail investors. It's going to be much more affordable. But I wanted to go over, actually, just speaking about the difference between this becoming affordable and this becoming cheap. Okay, so when this splits, when this does a forward split, this is not going to become cheap. Just because it's going to be now a much lower price does not mean it's cheap. And what do I mean by this? Well, what I mean is that the market cap of the company is not going to change, right? This is still going to have a 1.12 trillion market cap, or somewhere in that area, right? So that's not going to change. What's going to change is the amount of shares that exist. So instead of 458 million now in the float, now we're going to have 9 billion in the float instead, right? Because you take this number and you multiply it by 20 to get your new float, because they're adding 20 shares for every one share that exists out there. So you're going to get a much higher float, which means that Amazon actually may end up moving a tad bit slower too after this happens, because we know that, the lower the float, the easier it is for a stock to make a move. However, when the float starts to get much higher, it can become a little more difficult for the stock to make a move. So that'll be interesting to see. And again, it's not getting cheaper, it's just getting more affordable. All right. So don't think that just because it's going to go to 120 tomorrow, that it's going to come back up to 2000, because that's definitely not the case. I know, most people here are pretty smart enough not to think that, but I'm just letting you guys know, just in case maybe you didn't really understand that whole concept, that the market cap stays the same. So I just wanted to talk about that really quick. And, if you guys have any questions, please say them in free live stream chat or say them on the voice here, so that I could have some topics to talk about. Let me see what we got going on for earnings this week while nobody's asking anything.
Yeah, I just wanted to touch base on this whole Amazon Ford split deal
Yep.
that's coming up here.
Sure.
I definitely agree with you that, yes, of course, the market cap's not going to change. The float is going to get bigger, right? Because there's going to be more shares of the company now after the Ford split. Now, the interesting thing is, I do agree that with the float being higher, that it's going to be harder to move this stock compared to how it can move now. But I do also think that just the hype of it being more affordable, that we are going to see some more volume. So I do see it running. If it's anything like some of the Ford splits that we've seen before, after the split, we could see a little bit of a run up, and then I think we see a dip of some sort. And then I think it keeps going in its trajectory that we've seen on the weekly chart, which is mainly up, right? But I do think that even though the float's going to be more, I do think there is going to be more volume.
Mm-hmm.
So I do see it eventually, even if we do see a dip, because the float's more and it's harder to move, I do think it continues to trend up over the long run. So I'm personally going to be buying after the split and starting a long-term position on another account that I have. I think it's going to be great. But yeah, that was good information that you gave on Amazon there, James.
Yeah, and I definitely agree with you too. I think, the volume's definitely going to get higher. It's definitely going to get higher for sure, because now the shares are going to get cheaper, which means more shares are bought, right? Because back when somebody was buying 100 shares of Amazon at 2,447, they were putting in, $244,000.
Hmm.
But now when it's $120, that 244K now becomes worth 2,000 shares, right? So it's going
Yes.
to be definitely a higher volume of shares being traded for sure.
Yeah.
We have some questions coming in here. So we have MH Prowler said, you probably get asked a lot, but what time frames do you use for option day trades? Okay, so that's a great question. Let's take a look at AMD for this question. Okay, so the time frames that I use for my day trades are usually going to be the 5 minute is my favorite. The 5 and the 15 are my favorite ones to use. I do use the 1 minute sometimes. I use it a lot to kind of see what's going on in a quicker time frame. But as far as the setups go and stuff like that, I like to use the 5 and the 15 more. And the thing about the 5 and the 15 is that you can find trends on here that extend over days or weeks. Okay, you could find stuff. This isn't really a great example, but you could find things where on the 15 minute, you see an uptrend going from all the way back here and it's an uptrend,
Hmm.
or vice versa, a downtrend coming from here. And you could see resistance on here that you wouldn't see if you were looking at the 1 minute, or just looking at the intraday. So
Right.
I like the 15 minute a lot to find the setups. 15 is like the bread and butter setups. If you could find a perfect setup on this, like for example, something like this right here, where you have the golden cross on the 15 minute, and then you also have my two day trade MAs, which are the 5 and the 9. Those are the
Yes.
SMAs that I use. So when those cross up, and you also get the gold cross at the same time on the 15 minute chart, this is usually a pretty good setup.
Very nice.
Oh,
Yeah, I
it
like
works.
that.
It works most of the time. You could have something like this right here, where it kind of crosses there for a minute, comes back down, bounces, and then makes its real move. So watch out for stuff like that. Those are going to
Yeah.
be bear traps when it comes back down, right? But it didn't really fall. under that
Yeah.
MA, it kind of just
And we see that a lot when the moving averages kind of converge on each other and start tightening up on each other, right? Those could be traps there. Um, James, we did have a question on YouTube actually. I'll go ahead and post it on the recording here. The question is from BebNet: will the option contracts be cheaper after the split? That's a good
Yep.
question.
Is Bebnet? Oh, he's watching on YouTube. Okay, and
Yeah,
also
this question came through YouTube. Yep.
okay. Oh, yep. So let me answer that, and then also Mr. Bull drops. I got you too. So yeah. So when Amazon splits Bebnet, it's definitely the options are going to get cheaper. As I was explaining before, basically, since a 2% move on Amazon is $60 right now, the options were very high priced because options go off of the amount of dollars that the stock moves rather than the percentage that the stock moves. So once it drops down and it's going to be $120, that 2% is now going to become about $2.50.
Nice.
So that $2 now that it can move, or $3 that it can move now off a 2% move, that's going to change everything. The options are absolutely going to get way cheaper. It's going to be like I could see it being similar to AMD options. Actually,
Yeah.
I think that's what it'll be. It'll be similar to the way the AMD options are priced. It's going to be something like these for sure.
And James, we were just talking about the volume probably increasing on this stock and equity side. I think there's going to be a spike in volume on the option side as well. A big
Definitely going to
spike.
be a spike in the option side. Yep, because these are going to become way more affordable. Now everybody can trade them. It's not only going to be the people that have, 20, 30, 40, 50K accounts that can trade Amazon options. Now we're going to have, everybody is able to play. So they're definitely going to have more volume on the contracts too, for sure. And then also Mr. Bull drops as do option contracts immediately open with the new price. So you're saying like in the morning, do they open up immediately? Yes, usually. However, there could be a delay in the option prices, especially for something like this. It's possible that there's like a little bit of a delay in the morning, like a 5 to 10 minute delay before the options update and have prices on them on Amazon. And also that can happen in the morning, like if you do like an earning play, like for example on Target or Dick's Sporting Goods and stuff like that. When the market opens, sometimes the prices of the contracts are delayed for about 5 minutes, and then they open up after that first 5 minute move. So that could happen too. But on stuff like SPY and QQQ, the options are all immediately open. They're immediately priced the second the bell rings. But some stocks, the options actually do take like 5 minutes in the morning to open.
Right. It might take a little bit time to update, especially right after the split. It's kind of like the technology kind of needs to catch up a little bit with all the new prices and stuff like that.
Yep.
That was a great question there on the Discord, Mr. Bull. James, we do have another question coming in through YouTube, and it's from Bedtime Lullaby. Wants to know what you think about long calls on Amazon.
Yep. So I think that you're going to want to wait a little bit before you get the long calls on Amazon. I think you're going to want to wait for a dip. Because like I was just saying before, is that remember that this isn't becoming cheap. This is becoming affordable. There's a difference, right? Because it's going to have the same market cap. It's still the same stock that it always has been. It's just a lower price for the shares now because there are more shares being added in. So I wouldn't immediately jump into long calls like right after it splits. I would definitely give it some time, especially because as we have seen, we play against market makers. Okay. We play against the big guys who are in there controlling what's going to happen. Right. And now it's not as black and white as I'm making it seem. It's definitely not as simple as they just do whatever they want and they make it happen. Right. But there is a certain kind of like game to it, okay? And you have to play their game, and you have to understand that everybody who is kind of inexperienced, in this kind of situation is going to immediately buy calls on Amazon the second it opens up. So knowing that's most likely going to happen, we have to say, are they going to want to let all these retail traders make tons of money on Amazon calls right after it splits? Hell no.
Yeah.
So
that's when we're going to see the dip.
Yeah,
You know,
exactly.
probably.
Wait for a nice drop in the price first, and then I would say, consider getting like long calls on it. I mean, hell, if it's going to open up at $120, right, with the way that the market is right now, it's very, very possible that we see Amazon.com under $100 per share, because
Right.
at this point now, a $20 drop is only 20%. Very, 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 very possible that Amazon can drop 20%. If we get another big market downturn, which I personally think that we are going to get. So I would definitely hold off and wait to add long calls, but in the meantime, just kind of day trade it and play it that way.
Yeah, I agree with that. Absolutely.
Right? Because now if Amazon went, let's talk about this. If Amazon went from 120 to, let's say 240, okay? Let's say Amazon doubled from 120 to 240. That's as if it's going from 2400 to 4800. Right? It's the same
Yeah,
concept,
yeah,
just a lower
absolutely.
number. So it's not like Amazon became cheaper and we should all buy long calls on it now because it's going back up to 500, 2000, whatever. It's the same stock, it's the same company, nothing has changed. It's just a number that's going to be lower now.
Right.
So yeah, definitely be a little hesitant and like wait it out before buying long calls on something like Amazon right now.
Yeah, I mean, a basic way of thinking about this forward split is, yes, it's still going to be Amazon. The company's not really changing. It's basically the stock price is going to be cheaper and we're going to have more shares. I mean, that's really all it is.
Yep, exactly.
But, I do think it's a good thing because, yes, we're going to have more shares, but I definitely think we get more participants in the stock there because of that. So,
Yeah.
ultimately it could be a wash, as time goes on and as Amazon continues to take over other companies and get bigger. I mean, to be honest, I mean, I'm pretty sure they're going to be a lot bigger than they are now, 5 to 10 years from now, as they continue to make acquisitions and, kind of dive into other industries like they have been. Um, I mean, who would have thought, 5, 10 years ago, everyone knows what Amazon is and, okay, we go online and buy stuff and like that. But, they're diving into so many other sectors right now. I heard they're making deals. They're starting to take over prescription pill pharmacies. They're getting in the pharmacy game, and
Mhm.
they keep doing things like that are different than your ideal. Okay, let's go online and get and buy stuff and get it shipped to us. Well, they're getting into the pharmaceutical business, and they're doing a lot of other things that aren't really on the news all the time, which is just making them bigger and bigger as time goes on. So I'm really liking this forward split that they're going to do. I think there's a good way to play it, and we're definitely going to be playing it in the premium section on the Discord. That's for sure.
Yep. Yep, definitely. I know Amy Amajama said tomorrow Amazon is going to be her top watch for the day, and
Yeah.
I'm sure that it's going to have a run, right? Because it's just inevitable. It's gonna have some kind of a run. There's going to be some big move. So there's going to be an opportunity to definitely make a decent amount on Amazon tomorrow. We just have to play it the right way, and I will take a wild guess here that the implied volatility on the Amazon contracts is probably going to be pretty high. I mean,
Yeah.
first thing, right?
Yep.
So just be careful with that too. Like, I wouldn't buy Amazon contracts immediately the second the market opens because I think that they're going to be overpriced. I think that
Right.
you're going to want to wait like an hour or two and let them kind of settle down a little bit before you start buying them.
Yeah.
Mr. Bulldrop said, what supports do we see on SPY after seeing it drop 414 to 410 Friday? Any expectations movement wise? My SPY chart on Weeble is actually a little, yeah,
You
it's a little
played that a
chewed out
couple
just
times,
because,
huh?
yeah, I have a lot. I have a lot of lines on here actually, so I could actually tell you every single support level that I have all the way down. So actually, this actually works out perfectly for your question. Right? So, and also for those watching, like I do have so many lines on here, and I understand that this is totally a mess. So just to let you know, to save my good name, I use this to find all of the support and resistances, and then I have my other SPY chart on TradingView without all of these lines so that I could see it a little bit more clearly. But anyways, so this is what I have going down. So I have 409.88, 409.33, 408.65, 408.23, 407.50, right, all the way down to the levels in the 300s too. So basically, for each of these that it breaks under, it could make its move to down to the next one and the next one and the next one. As far as what do I expect from SPY, I I would like to say that we're going to get like a little bit of a run tomorrow after pumping on Thursday and then dropping so hard on Friday. You know, maybe we see a little bit of a relief from that drop. That would be nice. However, more realistically, it's possible that it could come down to like 407 again before bouncing. Just because that would be that last low, which was over here.
Yeah.
We had a low of 407.04, and then we also had 406.94 here. So a lot of the times when I see a chart like this, where it's 406.94, then another low, 407.04. So it's 10 cents above that last low. So I could say that it's possible that this comes down to, let's say, 407.14 or 407.24, right? Just so it could hold up what it's been doing, which has been kind of staying above that bottom and making it just a tad bit higher each time it drops down to it. So it might come down to that level of like 407, 407.49 is the line that I have here, right? So maybe it comes down and tests that before it starts to start rising again, or if it cracks under that, then we could go under 400 again.
Yeah, those were kind of the levels that I had on my chart as well. I drew out a Fibonacci myself. I'm looking at a level of 407.74. If we can't hold where we're at now at this 410 area, I'm seeing 407.74. If we can't hold that, then next level I got is around the mid 405s. These might be a little more general levels than what James has a little more detail plotted out than I have. But yeah, I mean, I think we need to hold here, or we're going to see, we could be heading to 407, I think.
Yep, I would agree. Yeah, so if it doesn't hold that 407 level, then I honestly think we could see it go under 400 again. And also like 7 is kind of like one of those numbers that I often see resistance and support at, is when there's a 7 in it. Like, for example, 407 or 412.97, right? Those 7s, it's just like a mental thing, I feel like. That's just kind of like something that I've seen in my experience. It's not really anything exact or anything like that, but the 7s are usually like the points of support and resistance. It's a weird concept, but I've seen it very often.
Yeah, could be the lucky number 7s, right?
Right. Yeah. We also have SG97 asking a question here. They said, "Can you please go over bull put spreads and how to open them?" Yep. So for that, all right. So SG97, do you do your credit spreads on Robinhood or Webull? SG. Just waiting on SG to answer if he uses Webull or Robinhood, because I could show you on Robinhood if you need.
Yeah, sorry, dude. I got both, and I have trouble. Like, I could run regular negative options on either, but I cannot open put or credit spreads. It keeps telling me like there's an error where I don't have enough in my account.
Yes. Okay. So that's probably because you need the collateral. All right. So for this. All right, so let me just show you basically the rundown of how it works. Okay, so when we do a bull put spread, what we're doing, already, but what we're doing is we are purchasing one put long and then selling another put that has a higher price, a higher strike, and then that results in a credit, right? So if I bought this $35 put for $220 and I sold this $36 put for $270, I would have a credit of $50. However, when you do something like this, you're opening it on margin because it's a credit now. So you need collateral to be able to cover in case the trade doesn't go the way that you planned. So it's the collateral that you need is going to be $100 times the amount of dollars in between the strikes. So like a spread like this, you would need $100 collateral. However, if I went all the way up to this one and I bought this one instead and I sold the 35, let's say, there's $5 in between the strikes. So you need $500 of collateral to open one spread. So I think that's probably what was happening, is that you didn't have the collateral available for the credit spreads. So it wasn't filling you, so it wasn't letting you place the order. Now, the whole thing with that, by the way, is that it asks you for this collateral, but since you're receiving a credit, the amount of money that you can lose on the trade is actually whatever the collateral is minus the amount of credit that you received. So if I bought this $30 for $75 and then I sold this one for $220, I'm getting a credit of $150, right? So I'm getting $150 worth of credit. So yes, I have to put up $500 worth of collateral, but I just received $150 worth in credit. So in reality, I don't start losing money until after that $150 has been lost, right? So I can only lose up to $350 on that, because max loss is $500, but you receive the $150 credit.
Yeah. Also, there, you know, if another reason why you might be getting the error message, and maybe you this is not a problem for you or not, but you got to have level 3 options, and you have to have a margin account. And also, when you open up the put credit spread, the name of the order to execute it at the same time is going to be a vertical option spread. Okay, so that's what it's called. You've got to make sure you have level 3 options and margin.
It's a vertical credit spread though.
Yep.
Because there's also vertical debit spreads too, which is like the other way around, where instead of selling them for a premium, you're buying it for a premium. But yeah, it is a vertical spread. Technically,
yeah, and you might be.
So I definitely think that I have to apply for both of those on Webull and Robinhood, because I can count on both.
Yeah, if you're not able to do spreads with cash accounts, you have to have level 3 options, which would be a margin account. So that's probably why you're getting your error message there.
Yep.
Is it?
Yeah.
And so don't you in Robinhood?
My suggestion to you, bro, man, would be to just use the Robinhood for the spreads and keep the Webull, the cash account, so that you can keep doing the day trades on there.
That's a good idea.
Yeah, just make Robinhood into a margin account, because first of all, also on Robinhood, I'm not sure what your account size or anything, but there's a limit on Webull where you need $2,000 minimum to be able to do the credit spreads and the debit spreads, whereas on Robinhood there's no minimum like that. So like if you only have like $500 to do the spreads with, that's fine, because you could still do it on Robinhood.
Yeah, that's the good thing about having a margin account on Robinhood is you know, you don't need that $2,000 minimum that you're going to need with other brokers to actually have the benefits of a margin account. You're going to need $2,000 in there. If you're going to use less than $2,000, then you know, just do it through Robinhood, and then you know, you don't need the $2,000 to do spreads with Robinhood.
All right. So does that answer?
Thanks, guys.
Yeah, absolutely.
All right, we got LT's Future Spread Prodigy typing right now. Let's see what they have to say. Remember, guys, if you guys have any questions. What's up, Mr. SLP? What'd you say?
I said I can't wait to see what he's saying. But, you know, I just read, I don't know if it helps maybe some options this week, but it says here 35 minutes ago, oil jumps after Saudi Arabia hikes the crude oil prices.
Mm-hmm.
So maybe there's some plays with the oil sector this week, maybe the Exxon or those kind of
See.
Yeah, I love playing XOM. That's a great one to play. The options are so mint on that stock. Yeah. Options are like so tight, the spreads, it's great.
Yeah, and then we got Marathon and Oxy, possibly. We can look at those.
Yep. Also for those of you listening to the recording, because you're not going to hear Lee. Lee was talking about how the oil prices have hiked because of what's going on in Saudi Arabia right now. So we're just talking about how we could trade XOM and other stocks like that, like MRO, Marathon Oil. and maybe capitalize off of the news that's going on over there. I also think that
So James, I don't mean to interrupt, but what
Yep.
is going on over there? I don't think I caught the news. What's going on?
Lee knows more about it than me. Lee should answer that question.
I was just saying that they raised the price of oil that Saudi Arabia did. Well, so I suppose the output price, they raised the price. So that's going to bring up the price in crude oil in general. So we're probably going to see a lot of oil-related companies maybe push higher this week.
Wow. Okay, that's good. Yeah. So, but what Lee just said is Saudi Arabia has raised the price of the oil for output, so we could see a ripple effect from that, and possibly a bump in the, I would think, the cost of a barrel of oil.
Yep, I mean, I know that I saw the gas prices around me go up recently. They were just $4.80 like a week or two ago, and now it's like $5.15 a gallon.
Yeah, it's almost it's above $5 over where me and Lee are at. I mean, and the price of gas in Orlando, Lee, what's it up to, like $5-6 now?
Okay, so regular is $4.75, and I think the premium is around $5.50.
Wow.
Yeah.
Yeah. So we'll be looking at oil.
I'm about to get on my bicycle.
Yeah, I mean, I think it's very possible that we're going to see $7 a gallon pretty soon.
Man.
You know, I think this summer is going to be the summer of high gas prices. So fill up the tanks now, and
I'm not going to quote the person who said this, but someone did say that when someone takes over, that the price of gas will go up to $7 to $10 a gallon, and that is exactly what we're seeing. I'm sure in California it's probably close to $7 or $10.
California, their gas is probably around $7 in some areas, I think.
James, but what I heard, James, is that in New York they're going to make it tax-free for 7 months so far. I think they just announced that, the governor did. That they're going to do tax-free on the gas, which is like, I don't know how much, like 25 cents off a gallon or something, for 7 months.
That'll be a little helpful, at least. Yeah, I actually didn't hear that, but that does sound, you know, at least they're going to give us a little bit of relief on that, so that'll be nice. But yeah, it's just getting out of hand, honestly, with these gas prices right now. Yeah. MH said here in Texas, premiums over $5, regulars $4.50. Yeah. So like, you know, in places like New York, California, Florida, it's going to be more expensive because there's more cars on the road. Blah blah blah. It's a city and stuff like that. Yep. So we're probably going to be seeing $7 a gallon in New York, and that'll probably translate to about maybe $6.50 in the in that middle, you know, that central area of America. And then the West Coast, man, I mean, California is probably going to be like $9 a gallon. Who knows?
Man, that's insane.
Yeah, we can definitely make some money on that, you know? I mean, I've kind of been waiting for the gas prices to go down a little bit to get into some of this stuff like MRO and, you know, XOM, like for a longer thing, but it doesn't seem like it's working out. And, you know, also, it doesn't seem like it's coming down is what I mean to say. And also, like, the thing is, though, is that XOM, like, this stock going up because oil prices are rising, in reality, is stupid, right? Like, would you guys agree with that? Like, isn't it kind of dumb that, you know, it's a company. It's not like this is an oil ETF. It's not like they're necessarily making more money on the gas prices rising, right? Because they have to pay for the gas, too. So it's kind of a silly concept that these stocks go up when the gas prices go up.
Yeah, I mean, you know, I think, you know, these big oil companies, trust me, if they have to pay more, you know, obviously they're gonna increase, you know, what they sell it for. So their profits are not going to get hurt, I don't think. And you know, they're going to bring in more revenue because of it, I think, right? But no, yeah. I get what you're saying. Absolutely, it kind of doesn't make sense, but I think just the simple fact that they're going to bring in more money is the bottom line there.
Yep. So, you know, this XOM right now has been just on a tear.
Yeah, that's
It's just hitting new highs left and right, like new all-time highs. So it's like something that I would be hesitant to just
yeah.
into.
Yeah.
But I mean, hell, I mean, when it's going, and you got to just go with it, you know.
Well, I mean, we got a couple things going for us if we did decide to take a play like this. Yes, we're buying, at the highs, but I mean, the sentiment of the oil industry is very bullish right now. So, there could be obviously some more room to the upside here, just because I don't see anything helping the oil situation anytime soon. Like this could be an ongoing issue with the high prices. So yeah, it's a little worrisome that if we did go long here, we'd be getting in absolutely at the high, but with all things considering, this run is not over yet. I don't think so.
Yep. Also, MH Prowler just asked another question. Do you use level 2 bid and ask sales for options? So I don't I don't feel the need to always look at that, right? The only reason that I would use it is just to see like how strong the option is, where the bids are and stuff like that. It could help you to see like, for example, if you're trading on an option with really low volume, you could see like where all the bids and asks are. You could see how many contracts are on each bid, how many contracts are on each ask, stuff like that. So it could help in that regard. Contracts don't generally have like a wall on them. There's generally no wall on the contracts because if the stock price is going in the direction for the option, then the option is going to go up. So it doesn't really help in that regard where there are walls on the contracts. However, it does help with like seeing, on the low volume contracts where all the bids are and like seeing how many are there and how strong an option can be. So it could be helpful in that regard, I suppose. But I don't really it's not something that's like super important to me if that's what you mean, but it does help me to maybe like pick the right option sometimes. Like if I see one that has very low bids all the way down and not many contracts on the bid, maybe I'll avoid that one. So yeah.
Yeah, I mean, the whole level 2 order book, I like using that on the stock and equity side for sure. You can pull up an order book for the option sales and bid and ask. Just because options are so volatile, I wouldn't put too much weight on the level 2 order book for the option side, but I definitely think it's a great tool for the stock and equity side for sure.
Yeah, it's definitely more important on the stock and equity side because you could see like where the walls are and it'll show you like where that like serious resistance is. Like when you're trading a stock and you see 200,000 on the ask at $100, right? You could say, okay, it's going to take a little bit of buying power to get through that wall and stuff like that. Yeah.
Yeah, and I mean the volatility in options in general. If you look at the order book for the option chain, that thing moves really, really quickly. There's just so much volatility there that it's kind of hard to maybe see a trend with that particular order book if you're using it for options. Let's see here if we got any questions. Okay, Mr. SOP, if oil continues to rise, BP will make new highs. Yeah, I like that chart. Look at that channel trading in there.
Yep.
That's beautiful.
Yep, it's in that range, so it can go back up to that top there and maybe hit a new high at like 35, something like that. Sure.
Yeah, I mean, look how bullish that MACD is, man. That's nice to see. It's going straight up, and the both the signal line and MACD line are well above the 0 basis line. I'd like to see that a lot. Yeah, look at that trend. That's nice. So me personally, if I was to play options on this BP chart right here, I'd probably wait for the price action to kind of pull down to that bottom trend line. It doesn't have to go all the way down and hit it, but I would like it to get close to there, and then I would probably open a position on a call option there. as soon as we get a little bit of pullback to that bottom trend line. What do you think, James?
Yeah. Well, yeah, I mean, the same thing for XOM. I mean, I would love to see it pull back down to the bottom trend line. I would absolutely,
Yeah.
I would absolutely
Oh, yeah.
grab the calls.
It might not pull back.
It
Maybe
might not do that, though. That's the thing. Yeah, it might not.
Yeah.
It might not give you the chance to do that. No.
Yeah.
I don't think it is going to, honestly. Not anytime soon, anyway.
Yeah.
But yeah, I mean, if it came down to here, that I would definitely buy calls. It would be a slam dunk from there. Even if it went under a little bit, I could, it's like oil is going to be a slam dunk play this summer. It's just you have to get in at a nice entry. You don't want to buy it all the way up here, but it could go even higher tomorrow morning. It could actually start following something like this for a little while until it cracks under that, and then maybe when it cracks under that, we start making our way back down to that line, right? But it could hold up. This is a valid trend line too. It could definitely hold up here like this and just continue higher off the trend line tomorrow morning. It's totally possible, and it's most likely what is going to end up happening.
I mean, WTI crude, the price of WTI crude right now is $120. There's predictions that we're heading towards 150 as far as that goes. So I definitely think there's a lot more upside with oil. We'll keep our eye on it, wait for some pullbacks, enter some calls, and make money on the upside, because I think we still got room to go here.
Yep. It definitely has more room to go. I'm just hesitant to get in here. But the thing is that, you know what, if the price, the crude prices are going up and all that, this is just going to open up in the pre-market at $100.
Right.
That's most likely what's going to end up happening. This is going to be triple digits tomorrow morning when the market opens.
I could definitely see that happen.
So that's the problem, is that you don't really get the chance to get in now. Obviously, you would have had to get in on Friday. So we'll just look for a dip, and maybe we could play.
It's gonna blow up.
Yes, it could. Yeah, it's definitely gonna blow up. Who is that? Crazy Ones? Hey, what's up, man? Just remember to mute your mic if you're not speaking, so we don't have any hot mics. Thank you very much. But yeah, it could definitely stay over this line. So maybe what we do is we play this trend line until it breaks under that. And then when it breaks under that, we watch it and we see if we could get it down here again. If we can get it down here, that would be mint.
I would take that play all day if that goes down like that.
Yep.
We do got another question coming in on YouTube. Spare Change Millionaire says, just tuning in. So they weren't here before, because we did touch base on this already. But any thoughts on investing or option plays on Amazon post-split, along with other high-profile upcoming splits? So yeah, we did actually just go over that a little bit ago, just to kind of summarize it, what kind of James was saying, and Mr. Stocklock Profits kind of chimed in a little bit, and myself. Basically, we're going to wait until after the forward split's complete. We're going to wait for a dip. And then at that point, we can start start a position in either on the stock and equity side, or the maybe a long option play on those. So Spare Change Millionaire, that's basically what our plans are. We're going to wait until after the forward split, and then wait on a dip, and then we'll start some entry level positions.
So yeah, we're not gonna do anything like go long on this or anything, because just to sum up what I was saying before is basically that the stock price is going to get more affordable, but the stock itself is not becoming cheaper. It's still going to have this same market cap and everything. So it's the same stock, same business, same everything. It's just going to have a lower number up here. So to jump into leaps immediately off the split is probably not a great idea. Also, because we see that the market makers usually manipulate the market in the way that they want, and they make it as hard as possible for retail traders such as ourselves to make any money on these. So you can't expect that it's just going to fly right out of the gate and just keep going up right after the split. So definitely just wait it out, and we're just going to day trade it for now. And then we see a dip. I was saying that, now that this is going to open at $120 tomorrow, it's possible that we see Amazon under 100. And I think that that's actually very possible, and that's what's going to end up happening. And then at that point, when we see Amazon under $100, that's when I want to grab long calls. That would be my plan of action for that.
And if we do get into a long call position, we're not buying a huge amount. We're going to leg into these, maybe break it up into 4 or 5, maybe even 6 different entries. So if we're going to be doing the long calls, make sure you have enough funds to be able to buy more than one contract. That way, if it does dip further, we can get a better average in the long run and kind of build the position over time.
Yeah, either that, or we could, you could also open up a debit spread too. Right? For something like that where it's leaps on Amazon, buying 2 years out or a year and a half out or whatever. You want to be able to add more than one contract. So if you have a smaller account, the leaps on Amazon are not going to be cheap. It's going to be, between at least between 500 and 1,000 per contract, I think. So you're going to want to open up debit spreads. If you have a smaller account, so that you're able to add more than just one, in the event that it goes down, right? And then also when we have a debit spread, we're able to purchase back the one that we sold to open if it dips on us, therefore making our average on the one that we are long on a little bit lower now because we bought back the one that we sold, and now we're just riding the long leg back up at that point too. So these are the types of strategies that we want to use right now, especially on pretty much on any stock that I'm going long on, like a leap. I'm going to have a debit spread a debit hedge for it, right? I'm going to have a short hedge rather, just because this is the nature of the market right now, where it's kind of a roller coaster ride where, we had this huge pump and then we have this huge dump, right? So that's it's just a roller coaster ride. So you want to protect yourself from that type of thing right now, and the hedge is the best way to go for stuff like
that.
Yeah, you could also buy shares too. You don't necessarily need to buy leaps. You could just buy shares, and then if you do that, you're even safer at that point. But obviously, your profit potential is not as high too. So
true. Yeah, shares would be safer because no matter what happens, you're always going to have those shares. You don't have to worry about decay on the contract and that kind of thing. But as far as the most upside, you're going to find on the option side by controlling 100 shares for just purchasing one contract for a small amount of premium. So,
yep. And when we do leaps, we want to buy one that's going to have the possibility of actually being in the money and I mean deep in the money, right? Because I don't want to buy a leap that's has no chance of being in the money. So I'm going to buy one that's closer to the price of the stock as far as the strike goes, so that there's a better chance of it getting in the money and running from there. Because that's like the sweetest situation you could ever be in with options.
Oh, absolutely.
Is when you're deep in the money, your contract has a 99 delta. It's beautiful.
Right.
It's great. So that's the type of situation we want to get into with these leaps.
Mm-hmm.
Same thing for Snapchat, actually. I want to do a leap on Snapchat too. Let's see. I'll probably come out here to like January. Yeah, because I did the long swing on it for the July options, but I didn't like that. It came down the next day and we were already down 25%. I was already adding again. So then the next day when it went back up and I was able to sell for, I think, about a 15% profit on those calls, I took it, I sold them. And now we wait for another dip. Basically what I'm waiting for on this is for it to test the bottom line of this like kind of a wedge that it's trading in right now. And that would be where I would want to start adding my leap. It doesn't necessarily need to be like a whole year out. It could be like October or November, but just not like only 1 month. That wasn't enough time. So I wanted to switch out to something that's out here, like maybe the 16 or the 17 or something like that, and be able to hold on to it and not have to constantly keep your eyes on it every single day. So that's my plan with Snapchat. I think a lot of stocks beyond meats. I think this is another one that's getting ready for something like that too. It's been trading in this wedge for a little while, so we're going to see, if it's going to break a bullish or bearish out of this wedge. Right now it's breaking down out of it, but that doesn't mean it can't come right back into it. Very often with these types of wedges, they do actually come right back. But we'll see. If it ends up breaking down under the support that I have right here at 2470. Then you might want to wait it out, maybe wait for it to get down to this low down here, 2220, something like that. But yeah, that's basically it. The course of action for swing options right now should be to always have a hedge on them, and if you do that, you're protecting yourself from this crazy roller coaster ride that the market has been going on now for a year.
Oh man, so
It's
volatile.
quite a nice ride there, though, for Beyond Meat from that low that it recently had, about $20, I think.
Yeah,
Yeah.
It was a nice push.
And they have some good things. I think long terms it will be great, but right now, just play the volatility at the moment.
Yeah, exactly. Just play the volatility, play the trends, right? We're not okay. So, like for example, when you see something like this, right? I actually posted this idea. I posted this on Facebook, and I also posted it on in my options alert channel for you guys. So when you see something like this on the hourly, or any chart really, the daily, whatever, and you see that it has this nice trend line here, okay? When it opens up in the morning on the trend line, usually it bounces right off of it immediately in the morning. It's something that I've seen so many times. I've done a lot of trades like this. Big Gains Hunter is here. He can attest to this, that we did something like this with Starbucks one time, where it was on a trend line in the morning and it opened up on the trend line, and we bought calls, me and Gaines, we bought them immediately the second the market opened. And when that happened, we were right because it bounced right off the trend line right in the morning. So you get a nice quick scalp at 9:30 in the morning or whatever time it is for you when the market opens. That's a nice scalp in the morning. I mean, when you see a setup like that, it's like this is a very nice setup. I'm very confident in something like this when it opens up on the trend line like this. So this is really the only trade that you need for the whole day. I mean, if you can nail this trade, you grab the calls right at the open. You nailed this trade. You don't need anything else for the rest of the day.
That's easy profits. Probably like 50+% profits right there. Easy, depending on the expiration that you got. But
I mean, $2 move. Profits. $2 move. I mean, we're talking a 10% move on the underlying stock. Hell yeah, in the option world, I mean, that's going to be a nice 50%, maybe even more runner on the option contract there, depending on how close you are to the money and stuff like that. That would have been an amazing play. And like you said, James, you do calls in the morning. Once you're done with that call option and that nice profit you got there, why keep trading and potentially give anything back to the market? You could be done for the day, relax and clear your head, and that's great, man. I like that.
Now I just want to go back to that whole Amazon thing that we were talking about too. With that whole split, so everyone thinks, oh, let's just jump right in because it's $122 in the morning, because that's what it's going to open up at, about 120, 122, something like that.
Yeah.
The thing is, it ran 15% before Friday, so you saw from last week till Friday it ran up 15%. It ran up pretty hot because of this whole split,
right?
That was going to happen. So I think we get a pullback. And we get a pullback, maybe 5%, maybe 7-10%, and then it starts to push higher from there. But don't always think that, let me just buy it now at 122 because it's so cheap, everyone's going to be buying it. That's not the case. There's still support areas, resistance areas that you have to go by.
Yep, and also Lee, so when this opens up tomorrow, we're going to see like a huge red candle down to 120, right? It's going to show the chart as if this took a massive drop. The RSI is going to be at 0. The MACD is going to be negative. So it's going to be like maybe a little difficult to chart it right away in the morning. And then eventually it kind of adjusts itself and the chart becomes what it's supposed to be. Like Apple, right? You don't see that anymore on the Apple chart. It's gone. But that's how the chart is going to look in the morning. It's going to be this big red bar down to 120, right? Because it's like kind of the same. It's the same thing with the reverse splits too. When they reverse split, there's a huge green bar up to the price that they split into. So we're going to see that on this too tomorrow morning, most likely, unless it's already all planned out and ready to go and it's not going to happen, which is possible because it's Amazon. It's possible that maybe they fix the charts right away. But usually that's usually what
I think they will probably fix the charting right away, but just because how big the company is, and I don't think they're going to mess something like that up. But I just think that it's already ran 15% this past 7 trading days.
maybe Monday we get a nice like scalp here or there. But I think just like if you go back to the Apple and you go back to the Tesla, a forward split, they came down like 20%.
Lee, I'm sorry, Lee. Are you on StreamYard right now?
Yeah, I am.
Oh, okay. So I'm. It's me. I'm the reason you're echoing because I don't have your volume.
Just mute me.
Okay, there we go.
Better?
Okay, cool.
All right.
We got that figured
Yeah,
out.
so like you look at Apple and you look at, I was like hearing myself too. If you look at Apple and you look at Tesla, after the forward split, they were down, I think about 20, and I think Tesla went down about 35%.
There was a dip after the split.
So I think that, yes, a dip after the split. So I think maybe Monday will be very volatile, but I think we come down a little bit. And then before we start pushing higher. So don't jump right in, guys, 100%. That's what I'm saying.
Yep. So here it is on the chart right here. It is right here on the chart where Apple did its split. So yeah, it actually, okay, so it split that day and then it ran for 2 days. And then on that second day that it ran, it hit that resistance and it came right down. And then we saw a nice drop right there. So, maybe we see something similar. Maybe we see Amazon pop up. Let's do a little.
I think it pops a little bit. I think Monday and Tuesday it's going to run a little bit, and then it could look similar to this Apple chart where we're going to see the dip.
Tesla looks exactly very similar to this.
Yeah.
And
they did their
actually,
split.
I think Tesla sold off a lot more than Apple did.
Wow.
Yeah, of course Tesla sold off more than Apple because it's freaking Tesla. Tesla is like, a $700 stock that trades like a penny stock.
I mean, there's so much volatility with Tesla. It's amazing.
Yep, Tesla is amazing. Tesla can make you rich, but it could also make you homeless. Tesla options can make you homeless. They can make you rich as hell too, because if you call the right way and it's one of those days where Tesla is running in the right direction for you and it's going up $100, or you have puts and it's going down $100, whatever it may be, serious money to be made on something like that. But they're also super volatile options. They do not follow the rules of Delta. They do not follow the rules of Theta. They really do not. It's like those options are super FOMO options in Tesla options. Wow. So you have to be very careful when you play Tesla. If anybody ever alerts a Tesla option, just know it's always going to be very high risk.
I agree with that. I mean, if you get the direction right, you can make a lot of money on Tesla options. But, keep in mind, if you get the direction wrong, you can also lose a lot of money if you don't have risk management in place and your stops in place. So it always goes both ways. So you just got to be careful.
Yeah, Lily says that she bought Tesla and Apple before the split, but she never went red in Tesla, but did in Apple. Interesting. Bought a few more, been good ever since. Nice. Yeah, and speaking of Apple, you could see right here, it kind of broke under this weekly trend that it was in. All the way back since September of 2020, it's been following this trend on the weekly chart, and now finally we're under it now. So we want to see this. If we want to go bullish on Apple, we want to see it get back over that and hold that line again. But it seems right here like it tried to retest it last week, and it couldn't get back over. It kind of just like touched the top right there, hit that resistance, and got smacked right back down. So it didn't want to get back into that trend. So this could realistically fall more. And, if Apple is going to fall, then the SPY is going to fall. Other things are going to fall. We get a little bearish because the Apple is a big chunk of the S&P. So, be on the lookout for that. This is a good way of trying to figure out whether or not the market is going to go up, too, is by looking at charts like Apple and Microsoft and things like that have such huge, are such hugely weighed into like the indexes, if that makes sense.
Yeah, it's a good indication on where the market could be heading. If we got these bigger companies like Apple and Amazon and Tesla, depending on their price action, that could tell us a lot about the market in general, right?
Yep. Absolutely.
This is Pandu. speaking of Tesla, it actually went down 9% last week.
Yep, it did on Friday. On Friday, yeah, it dropped 9% on Friday. Yep.
With all the news, and then the weekend, it got like a lot of tweets.
Yeah, it was the news about Elon firing a bunch of his workers or something like that, laying people off because they didn't want to come into work. They wanted to work from home. But in my opinion, that's a silly reason to sell off the stock. I think that it wouldn't have sold off so hard if the market wasn't so red on Friday too. I think that those two things combined kind of sent it tumbling down 9%. But I don't think that news is necessarily like such bad news for the company. I mean, he's Elon Musk. There are tons of people that want to work for him. He could always go out and get more employees. So it's just a silly reason to sell it off, in my opinion. And I think it will recover. But the whole thing is that the market is red too. Also, maybe Lee could correct me on this if I'm wrong or swinging bull, but I believe that Tesla got taken off of the S&P 500, right? No longer on there.
I didn't hear that. If that's true, that's a big deal.
That's true.
Yeah, I thought so. Yeah. So this is off of the S&P 500 now. But the thing is like it's ingrained in everybody's mind that it was on the S&P, and it's going to follow the S&P either way, right? So if like most of the time, if you see the S&P green, this is still going to be green, and then if you see the S&P red, this is still going to be red most of the time. Although Tesla is one of those stocks that can technically veer away from that. Like if the market is going down, Tesla could still go up, just because of the hype around this stock is unmatched by any other stock. There's a lot of hype on Tesla. So, if Tesla's hitting a major support point, even if the market's going down, we could still see Tesla bounce off the support point and have a nice big green day. It's still possible for things like that to happen. But yeah, they are off of the S&P 500 now. So now this stock has no weight over the index in the market, which I find interesting. And, honestly, when they added it in, into the S&P 500, I was like, I feel like they're going to regret that, because Tesla is such a volatile stock that it could pull down the market. It could pull up the market because of how volatile it is and how much it moves. When a stock that's part of the S&P, moves up 10% for the day, that's a huge freaking move. Okay. And that's going to pull the S&P. It's the same thing for Apple. I mean, if Apple went up 10% one day, the S&P would fly. So it's stuff like that. But Apple doesn't generally move that hard. You don't really usually see a 10% move on Apple. I mean, even a 4% move like we got on Friday is pretty unheard of. I mean, it doesn't generally move that much. But we're seeing all of this volatility right now, which is awesome for option traders because we can make tons of money on volatility. But it's also scary. It's also a little, it makes things a little bit more difficult. Like when you want to swing things overnight, it makes it harder to do stuff like that because of the roller coaster ride that we're in right now. And then again, that gets back to what I'm saying before. That's why you want to add hedges to anything that you're swinging that you think you're going to swing for more than a day. I would definitely add some hedges.
Yeah, and it always moves on Elon Musk. Whatever he says really just affects the stock price. So you just want to follow what he says.
Subscribe to his Twitter channel and get notifications, right?
Yeah, but it's that whole news that he's going to cut 10% of, I think, the salary paid employees. That really hurt the stock price because it was moving up really nicely. And then that just dropped 9%, right, in one day.
Yep, 9% one day, yes, sir. But yeah, that's pretty much it, guys. It is 9. So unless there are any more questions, I'm going to cut it off. And
this was a great stream, James. I appreciate it.
Yeah, man. Thanks for coming. Thanks for being a part of it too.
Yeah, Lee as well. Appreciate it.
Yep. All right, y'all. So thanks for coming. I'll see you all tomorrow. We're going to play some Amazon tomorrow. Amajam is going to be on top of Amazon all day, she said. And I'm going to be watching also Dave & Buster's. as they have earnings on Tuesday morning. That's going to be one of my watches too. So
There we
keep
go.
an eye out for some trades, and thanks a lot, and we will see you tomorrow.
Yep.
Thank
See
you, guys. See you
later.
tomorrow.
Bye-bye.
See you.